presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
And Tom O'Brien is out today, and I'll be sitting in for him. The one and only Tom O'Brien, not here, but Dave White sitting in. Just coming off that bench to fill the last hour. We'll have Steve Rhodes on in the second and third segments. So make sure, and if you have any questions for either of us, give us a call at 877-927-6648. And we'll go through a great deal. I don't think a lot has really changed since I did my show in the last hour, but we'll try to update everybody if you're just coming on to TFNN for the day. The big news is we had a bounce. Someone threw a party, and there isn't much in the way of party goers. Normally, I look at volume from the CBOE. If you would like that, you can always email me at path at tfnn.com, and I'll be glad to give it to you. But volume has come to a screeching halt with about 6.6 billion shares. And in fact, why don't we do this so I can give you the full impact of the volume, and that is bring up the volume I put in my newsletter every day so everybody can see it. We had light volume Friday, and I was talking about it. Ended up with about 10.6 billion shares. But even in the pops that we've had before, 11, 12 billion shares, with the 6.6 billion we have now, that kind of probably maybe 9 billion shares, 9.2. It's going to be a light volume day. When we have previous highs in this neighborhood, if you go back to like the 2nd of February, when we've tried to break out highs, we've had 15 billion shares still not able to break through the previous highs. Those highs in the high 4100s have all been made on somewhere between 16, 17, 18 billion shares. So there is considerable amount of volume to make up. If we're going to break those highs with volume, we may still go up and test them. There just isn't a lot of power, at least today, after seeing what was kind of a light turnaround on Friday. So anyway, we continue to see a couple things I bring up on my show from time to time, which is dark pools. And we got some news in the markets about a lot of 401k selling, some other stuff in the early part of 2023 so far. I know a lot of people, it does seem when you ask people what they think of the market or what other people think of the market, it's kind of interesting to see everybody think that either everything's bad or everything's good. I think that has to do probably with what channel you're watching and maybe when you're watching it too. I've seen a drastic difference between Bloomberg at 2:30 in the morning when you're talking about international markets and the world in general to what's going on early in the morning, and then CNBC and some of these others. And maybe you have a real mixed idea about what's going on. Anyway, for years, the dark pool percentages have hovered around 35, 36, 37%. We've had a long stretch and even getting below 30%. If you're unfamiliar with dark pool numbers, that is where big guys sell to other big guys without being trampled upon by the high-frequency traders. These folks only trade big to big. and you never really see what's going on. You only see it reported later in the day on the sales, and a lot of times those can be 5 to 15 minutes late in the day. But that we have such low dark pool numbers means that there isn't a lot of selling from the big to big guys. And as I said, the Wall Street Journal had a nice article about retail traders selling into the move higher right after the start of Christmas. So the question is, who's right? Is the glass half empty or half full? Well, on a day like this with no volume and a push higher above what I was looking at for resistance in my newsletter this morning, that can't be good. Now, sometimes it just takes a day or two for everybody to come along, and most of the time that's not true, though. Sometimes it is. As I said earlier in the segment, we've got earnings. Really, the big earnings this week are not going to be until Thursday night, and then economy numbers. And then the question is, will people want to hang on through a 3-day weekend when the markets are closed next Monday? So a few things to think about there. Okay, what do we have here? Okay, I'll email that to you in just a minute, Nick. But certainly we've got a lot of stuff going on. When we return, we will talk with Steve Rhodes, and he'll be on for a couple of segments. So we'll have lots of stuff to talk about. Before we go to the break, I forgot to do my history segment in my show, so we'll do it now.
And it's all just a little bit of history repeating.
On this day in 1895, the Lumiere brothers patent their cinematograph. I think that's what it is. Cinematograph, one of the earliest motion picture projectors. This also served as a film camera and a developer. This is one of the first all-in-one devices ever made, in which literally everything was done. Not a real success, but kind of an interesting idea, the Polaroid of its day in 1895. And, of course, more interesting to me is that anytime you buy a bulb, a light bulb, it's going to have a lumen number on it. Tells you how much light is in there. They may not have been a huge success in making the kind of stuff that made Hollywood famous, but at the same time, they got their name on every light bulb. So as we get ready to wrap up here, I'm just going to go back to the market already in progress and see what we have. Go through the highs here. Up 36 on the S&P, Dow's up 290, Nasdaq's up 150, Russell's up 17, crude oil up 17 cents, gold down $12. We'll be back to Steve Rhodes in just a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, this is Dave White sitting in for Tom O'Brien, but not just me. We're going to have a double shot, kind of like going to Starbucks and getting that latte with two wonderful shots in it. And that will be Steve Rhodes is joining us here today. How you doing,
Dave,
Steve?
Good, Dave. Are you a Starbucks guy?
You know, the only coffee I can actually stand is Starbucks, and that's if they throw lots of like vanilla syrup in it and cream and milk and stuff. I'm not a regular coffee guy, although I grew up in a city that had Folgers and made the whole city smell like a coffee grind. But
I like the smell of coffee.
I love it. But other than getting a $6.50 cup of coffee, really? I'll drink that. That's about it.
Yeah,
but I do like the.
Go ahead.
Go ahead. I do like the double espresso. That will get me going.
I would think so. You know, when I was in college, I used to. I moved away from home when I was 17, and so my parents were like, they were cool with that, but they were like, you're totally on your own, which was fine. So when I went to college, I used to have a night job, from midnight till 7. Then I would go to school, and that was for the first 2 years that I put myself through community college. And how I got through there was drinking coffee. But I drank so much of it, I just kind of got sick of it. I don't drink it anymore. I love the smell. I love like coffee candies and things like that. That I'll suck on every now and then, but not a big coffee drinker, so I don't even know what it does cost for a cup of coffee. But $6 sounds like an expensive cup of coffee to me.
I think that's because I like it because it's got 2 shots of espresso, a lot of milk in it, and foam and vanilla and everything else. I don't know if it's actually coffee. Some purists would probably tell me it's not.
Yeah.
But we're looking at it. So what do we got from you this week?
Well, did you enjoy the Super Bowl? We're going to talk a little bit about football, and we'll take a look at some charts as to what it may or may not mean for the S&P 500. Did you enjoy the game last night?
I tell you what, I think we talked somewhere around noon or 1 on Saturday.
Yes.
And with about an hour after that, I got into bed, and I didn't get up till this morning at 6.
Ooh.
I had
Ooh.
I think it's either it was a flu or a cold mixed with a little bit of Ebola and maybe some typhoid. I'm not exactly sure what it was, but I feel good other than
Okay.
I'm just tired. So
Okay.
it was a, I think you were the last human I talked to.
Well, I'm sorry
So
to hear that.
that was
I'm
it.
I'm sorry to hear that. You deserve better than me to be the last voice before you fall deathly ill.
I do have to tell you, my growing up in Kansas City was consisted of Podolak running it up the middle them running it up the middle 3 times. The kicker, Podolak, I think was his name, kicking a field goal and losing. And 4 and 10 seasons for 20 years in a row. So
well, you have something to cheer for now, that's for sure. 2 out of the last 5, I think it is. So, congrats to the Kansas City Chiefs for their Super Bowl victory. And Dave, what I thought we would do is just see what kind of meaning that has to the S&P 500. So, as you know, I use this tool produced by the organization called SeasonX. And they've created this amazing tool that allows you to take a look at historical type seasonal patterns out there. And you've seen my charts on that. I used to do all that, with spreadsheets. It was always, very time consuming out there. So it's nice to have this application. In this application, one of the things that they've added is an event type of scenario. By events, one of the events that they happen to have programmed in there are Super Bowls, what happens maybe before the Super Bowl starts, Super Bowl victories, whether it's the NFC or the AFC. So since Kansas City is an AFC team, that's what we're really going to focus on today. Now, this chart takes a look at, so the AFC has won 28 Super Bowl championships over the last 57. So basically it's a 50-50 win. It's 49.1% to be exact. However, out of the last 10 years, the AFC has dominated the NFL. They have a 70% win rate. So this chart here, Dave, takes the that 10-year period and takes a look at those years where the AFC has won. The red vertical line out there shows you, in essence, today's date. So the day after the Super Bowl. And we can see here that when the AFC team has won during the last 10 years, we have seen the market just simply move higher, very much like what we're seeing today. So over the last 10-year period of time, the S&P, at least for day number 1, that's not a great sample size, but it is, if we take a look at this chart here, it is following along with this analog, if you will. So if this analog is going to stick, folks, then what you can do is you can take a look at this and see that the S&P 500 should move higher for the next 10 trading sessions. So this shows me the 10 trading sessions before, the 10 trading sessions after. It will allow you to do up to 30 trading sessions. This chart here shows that during the last 57 years, now instead of just taking the last 10 years, I've gone back and taken a look at from the beginning, Super Bowl I. And if you go back to Super Bowl I, I can then take a look at how many, and so what I've got here is, what I have on this chart, I should say, is I've got all the AFC victories, which is 27 of those. And here, this shows that over the last 57 years, because we had 57 Super Bowls, typically the market after day 1, that would be Monday, moves down and then just simply continues to move up for the next 10 days. So there's from a seasonal perspective, Dave, everybody that's listening, if you're watching it in, if not, you can go back to the replay of the show and you'll be able to see this chart on your screen. So there's a pretty dominant suggestion that the S&P 500 should at least move higher for the next 2 trading weeks. Now, I know I heard you talk about the holiday President's Day, I believe is this coming Monday, and then you've done the work that takes a look at sometimes changes that occur after a holiday. But this is what the AFC looks like. Now, what I've also been able to do, just so that we can have a bigger picture here, Dave, is I've gone back. This is the S&P 500 chart, and folks, if you take a look at the check boxes, those are all the years where the AFC has won. The check box, the year that it's dealing with, is the year just to the right of it. So for 1998, you'll see that check box, and it's referring to the year to the right. So this gives us a bigger picture, not just taking a look at about a 10-day average out here. And again, that vertical line represents today. Now we can see that over the full year, what this is suggesting is that we should see the market move higher, maybe into the end of this week, mid part of this week, next couple of days. But basically, this is saying that by the end of this week, we should see some kind of market top. And that market top should take us into a low into the middle time of March, and then move higher into that so-called sell in May cycle. Now, this is not the full sell in May cycle, folks. I'm just looking at the 27 years that the AFC has a victory out here. So that's how we put together what does the Super Bowl game, how does that impact the charts that we're looking at. So we can talk about this a little bit further. I hear the music, so we're getting ready for a break, and I'll pick you up on the other side.
Yep, we're here on a low volume Monday with Steve Rhodes and David White. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we return, we've got Steve Rhodes on for yet another segment of Tom's show that I'm sitting in for him on today. So, did you want to talk more about that, or do you have?
Yeah, just a quick follow up, Dave, if I can. So this chart here, this is where we left off going into the break here. This is the full year after an AFC victory over the last 57 Super Bowls. And again, this shows us that we should make some type of top this week and then move lower into the middle of March. Now, this chart here is looking at the S&P 500 over the last 73 years. And this, too, shows that we should see some type of top within the next few days. So we'll just simply call it the end of the week, with the markets moving lower into either late February or the early March timeframe. So, everything here is tying out with each other. And so that's what, if anybody was wondering, is there any kind of meaning behind the Super Bowls? Well, at least Stevie's got a tool here that will allow us to go ahead and take a look at what's going on in a very short-term time frame, just as we did here for the 10-day period, but then also what does it mean bigger picture-wise. So just interesting to take a look at. Dave, this set of charts right here, just staying with the S&P 500 for folks, this chart here takes a look at the S&P at the top row. Bottom row is the ES Mini. And this is for the yearly, monthly, weekly, and daily time frame. So we're taking a look at larger picture out here. And if we take a look at the weekly chart for the S&P 500, what people should notice is you can see an A to B equals CD to the upside. So that's already in place out here. And that suggests that what the S&P 500 should do is target the 43.75-ish area. Don't hold me to the penny out there. But when we look at the ES Mini, what I like to see, Dave, is I like to see confirmation from whether it's the cash indice or what's going on in the future market. When we take a look at the equity future market for the ES Mini, what I'm showing here right now is a continuous contract. This price needs to close above 41.80. Now I need to go back to the March contract to make sure that is the high. It should be the high, but just to make certain. But what I can say is that the ES Mini has not taken out its swing point to confirm that A to B equals CD pattern to the upside. So what's that mean? It just means we don't have confirmation. But if the ES Mini were to close above 41.80, folks, then I would say what that's telling us is that the weekly chart should go on over time and complete that A to B equals CD pattern to the upside. So that's what I see when I take a look at a weekly chart. If I take a look at the daily chart, so I go down one level lower just to see what kind of information we can glean out of this. The left-hand side here, folks, is the S&P 500 from a daily perspective. Now, this snapshot was taken probably a couple of hours ago. So, Dave, I don't know if prices trade above 41.24 as we speak right now, but if price does close above that on a daily basis, it's suggesting that we should see a further rally tomorrow. If the ES Mini, and I don't know exactly where it's trading right now, Dave, but if price were to close above 41.33, that would suggest to me that price should go target the 41.68 area. And 41.68 is the top of its profile. And a profile, folks, the top and bottom, the top is where sellers are located, the bottom is where buyers are located, and oftentimes there's a center line. That center line is where both buyers and sellers believe there's fair value with inside that range. The range here is 40.27 to 41.68. And where that fair value level is at 40.67. Is it odd, Dave, that on Friday, as the markets moved lower, the ES Mini moved lower, price found support at that 40.67 level? I don't think so. I think that's just simply how these profiles work. So this is the cool thing about this. The S&P 500, if we take a look over on the left-hand side, what we'll see, Dave, is a TD9 count top. We'll see two tops. We'll see a wave number 7, that's part of the Chapman wave, and we'll see a TD9 count top. So whereas the S&P 500 has a confirmed top, the S&P or the ES Mini does not. What the ES Mini needs is a bearish reversal candle to confirm a sell the D point pattern. But here's the cool thing. If price closes below 40.27, and most certainly if it closes below 40.27 for 2 days in a row, this is going to tell us that the market should move lower. And the target on the S&P 500, the cash indice, would be 39.49. So that's what I'm looking at. So what does this mean? Kind of sum it all up, Stevie. The way I'd sum it up is we do not have confirmation, double confirmation, I see. Double secret probation, that is. No, double secret confirmation of a top inside the S&P 500. We've got them for the Dow. We have them for the for the NQ, the NASDAQ, and the NDX 100, and the same thing inside the Russell. So it's just the ES Mini that is the stubborn animal here. Now, the other thing that's cool. Now, let me get out of this chart here and actually go to the S&P 500. If the S&P 500, folks, the cash indice, were to close above the high from the trading session of, what's the date here? It's February 2nd, and that high, just write this down on your pad of paper, folks, 41.95.44. The S&P closes above that. It'll negate its TD9 count top and suggest that weekly A to B equals CD pattern we looked at should absolutely come to fruition. So that's kind of my overall. I expanded a little bit than the normal time allotted during Tom's segment, but that's kind of my overview of the segment here and what's going on inside the markets. Now, what I'd like to do, Dave, if it's okay with you, is I had posted a few charts during the afternoon after my show for the folks inside the Tiger's Den. And I just have, every now and then I look there. Oftentimes I'm working, I don't get a chance to look in the Discord stuff, but I just happened to look up and saw that somebody had taken a short inside, I can't recall if it was the ES Mini or the NQ. And so what I did was, what I was noticing is that probably came in at about, I can give you the approximate time here, probably came in just before 1 o'clock, 1:30. Right in that time frame. So before you were going on the air, and what I shared with the Den was that we took a look at TD9 counts. I just mentioned the TD9 count in the S&P 500. We have seen that formed a top, and we did see a retracement, and so forth, or move lower. Here we're looking at a 30-minute time frame chart. And folks, the tools that I use, they work for all time frames, all instruments. We're agnostic to the chart, and the patterns are the patterns. Well, it turns out that what I post inside the Den for the individual that went short was that that individual must have been paying attention to the TD9 counts out there. And if folks want to learn that pattern, and they should want to learn it, no matter what time frame it is that you trade, that's one of the courses that's available for subscribers to Mastering Probability. And everybody can get access to that for 30 days with no cost, as long as you haven't tried it before. And so if we take a look at the ES Mini, the NQ, the YM, the Russell 2000, each of them this afternoon topped with a TD9 count pattern. It's a great pattern. And I know, Dave, that you also use that. You take a look at it. You take a look at it inside your newsletter for subscribers and so forth. We take a look at the reason that the first post was that we should get a TD9 count top that gets confirmed by 1:30 in the or by 2:30, I guess it was, by 2:30 in the afternoon. And because the high of that pattern can form on the bar following bar number 9. Then I reposted this chart. And the reason why I reposted it was to let the individuals who were short to know that price was pulling right back to support. Again, here's these market profiles, something that we talked about when we looked at my other charts, Dave. And we can see that the ES Mini pulled right back to 41.30. The actual low so far was at 41.30.50. And this says 41.30.90. Both you and I know the ES Mini can't trade to that level. It trades at 41.30.50. But really right to the T. Right to the T. Now, before the first post, we didn't know where buyers were located because we didn't have that profile. If I had guessed where buyers were at, I would have had to say they're at the 41.01 area until a new profile forms. Well, look at the NQ in the upper right. Are we looking at that chart? Did I change that screen? I did not. Son of a gun. You let me talk like this and I didn't even see the screen? Oh, my goodness. Here we go. I'm going to post that screen up now. So here are those 30-minute chart, folks. You can see the TD9 counts, each of them forming at highs. We can see how price back here in the ES Mini pulled back, and it has tested the 41.30 level and held. So right now all we've got is a consolidation. So how are you going to trade this tonight? Folks, in the ES Mini, if it closes above, if you see it close above 41.49.50, it's telling you it wants to go higher. In the case of the NQ out there, the level to be watching overnight, Dave, is going to be 12.567. Sorry to take up all your time.
No problem whatsoever, Steve. Thanks for sitting in with me today. We'll be back in a minute.
You bet.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
And as we return, we go to the email. And of course, Hector wants to know about the XLE. We looked at 4 or 5 of the energy stocks in the previous hour. We're going to take a look at XLE. I think Steve's going to come back in, and I'm going to look at it, and he's going to look at it, see if he sees anything else. On the short term, I just really dislike the light volume we have today on everything, including on the XLE. With this pop off of the 10th, that you had about 20 million shares, you got about 10 million shares so far. So, when you look at just retracements, standard retracements back into this move higher, let me zoom in here so we can see. You basically came right up to the 618, went a little bit over, and you're pulling back into that at the moment. You get a big move like that, you generally want some follow through. You've got a couple of days for maybe that to happen. Not exactly sure why we finally got the bounce yesterday. I think a lot of people are thinking that commodities are coming back. The problem I have with that is just gold and some of the others. So don't know if we've got Steve back on the line now. Do we? Are you there?
I am. Do you hear me?
Okay, good enough. So that's it. I'm not a big fan of getting a nice gap higher and then everybody the next day just going silent. But that's me. And I would have liked to seen some of the other sectors out there. I mean, crude basically flat on the day, down 31 cents. Gold's down 11 though. And maybe when we get talking about this, I was looking at some of the gold charts, and I kind of liked what I saw in those. After we get your opinion on the XLE.
So who do we have on the line?
We don't have him on the line. He just emailed me, Hector. You call him the fuel injector. I call him the Holly 4-barrel. But yeah.
Perfect. Okay. So let me see what I'm showing here on my and the question was really just about the XLE, which okay. So in the case of the XLE right now, what I've got is I have price just trading between support and resistance, and that's the support and resistance of its daily profile. It's bullish in structure, and the top of that profile is 90.50. There's also a confirmed A to B equals CD to the upside. It's a small one. I'll change my screens out here so folks can see that, and they'll see it on this black background screen that we're looking at. You're going to be looking at the left panel. I'm just simply going to go ahead and expand it out. So it's a small A to B equals CD, but it still is an A to B equals CD. In fact, I think it's Hector and Patty are the ones that actually picked this out for me. So the A point out here, folks, is the trading day from February 6th. Makes a 2-day move up to a high on February 8th. That's at 88.73. Now, volume on that day. And Davis is a big volume guy. And 13.5 million shares. Well, when that was passed, it was passed on February 10th. That was on Friday with 20 million shares. So 20 million shares took out 13 million shares. That gives us the confirmed A to B equals CD with a price target of 90.96. But because we know these profiles where sellers are sitting, the real area, the defense is between 90.50 and 90.96. If price is able to close above 90.96, and especially if it's moving into that with more than 18 million shares, that's going to suggest that we're going to see more than a 1-to-1 A to B equals CD to the upside. But the daily chart shows resistance is resistance, and until it passes, that's the resistance level where things are at. On a weekly time frame chart out here, Dave, price is above resistance. The only resistance level is really at 91.35. I'm going to change screens again. And 91.35 is the green oscillator and change line. And folks, a green oscillator and change line tells us that for the weekly time frame, the price oscillator, which is the difference between the 19 and 39 period exponential moving average, this tells us the price oscillator is above 0. Now, when price is below the green oscillator and change line, it tells us that its momentum is waning here. So that helps us to understand. Then we go back to the daily charts and say, okay, well, if it's waning, what does that mean out here? Well, we've got that confirmed A to B equals CD. So we don't have to tackle that issue necessarily right now. But 91.36 is a resistance level. So we had 90.50. We had just above the 90.50, 90.96. And now we've got 91.36. So Hector and Patty, there's a bunch of resistance up above you. We've given you those levels. And if price can clear that, there's one last level, and that's coming from the monthly time frame. And this is a new profile that is formed this month, and that resistance area is 94.71. So we can very easily out here lay out support and resistance areas. And for us, this is just kind of like a laboratory. These charts here, we know the patterns, we pay attention to them, and so I like the XLE. What I really like is the XLE from a long-term standpoint. So my belief is that we're going to see oil continue to move higher, and in the confirmation that the XLE is a great long-term holdout here is going to be a monthly close above 93.31. 93.31, that happens to be a TD9 count top. So during my second segment with you, Dave, we took a look at the TD9 count tops. We just briefly mentioned it during the first one. This is a great pattern. Everybody should want to learn it out there. It'll assist them for all their trading, no matter what it is, and really no matter what time frame. So that's my take on the XLE, is that Hector and Patty should hang tight and stay there.
Okay, the last one we'll do today is the GDX. I was looking at this coming back to previous highs and a gap from December 1st of last year and December 13th of last year. Both of those are in the high 29s. We're back to that on lighter volume, just 16 million shares on Friday, and just a little under 10 million shares here today. So I like it when you come back to, well, the first one was a 50 million share high. So you're back to those levels on fairly light volume. So I'm thinking that if you were going to take a stab at gold, we're pretty close to probably finding some kind of support.
So gold or just the GDX?
I'm just looking at the GDX.
At the GDX, okay. So your signals are saying, hey, we're pulling back to we're pulling back into a gap. We're pulling back with lighter volume, and this might be the signal to take that position. What would be the apprehension you would have about taking that position? Obviously, losing money, I get that, but from a technical standpoint of what you're looking at, or what do you need to see to?
Energy was a little bit much on the way back down. The gap down on the third had 35 million shares. And that doesn't mean that the trade's any worse. It's just whether or not it goes sideways before it goes up. Do we end up with a V as a Wyckoff trader, an automatic rally? Or do we see more of a U bottom? And generally when you come down or gap down or see, the initial volume in between the highs and the lows kind of pick up, I'm more of a fan of saying that sideways action is probably going to extend itself more than 5 minutes down at the low. Generally, lows have pretty good Vs, but high volume, gap downs, that kind of stuff, even if you come back to support, you may spend a handful of days going sideways.
Sure. Well, to add to your idea of taking a long position in the GDX, it formed a TD9 count bottom on Thursday of last week. And as long as price is not closed below 29.59, that bottom pattern remains in effect. We're trading at 29.64 right now. And what I can share with you on the weekly is I've got a confirmed A to B equals C to the upside. That should take us to about 36.50 or so. So, Dave, fun to fill in and sit in with you. Enjoy that last segment, and I hope you feel better. And look forward to speaking to you soon.
Good enough. I'll be back in just a minute to wrap up the day.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
As we come back to wrap up yet another day here at TFNN, as we look at the indexes up, let's call it 41 on the S&P, 333 on the Dow, Nasdaq's up 155, Russell 21 plus 21, crude oil down 36, gold down $9.80. So I think the story today, from watching all the volume come in, is we may have a low volume day for the year on this pop, which generally not something you want to see as you're attacking more highs. Now, it's not beyond the scope that we go higher on lighter volume. And of course, next Monday is a closed day. That would take us into a 3-day weekend. I'm one that early on heard some theories about how markets love to change, if not the character, certainly the direction that they're going. And that tends to be over these long 3-day weekends, more a bigger move into the summer ones. And there's a lot of thoughts that people go out and they talk to people and they do things that they wouldn't regularly do. And that kind of gets them off of being stuck on one position, and their opinion changes, or they listen to other people that they wouldn't normally do. So anyway, we've got that day coming off. So the question is, do you think the market just goes up and we're going to continue to have this, what I'm going to say is almost ridiculously light volume challenging previous highs? That would suggest that we come back, we do have a big downside. I think maybe the way that this is setting up is that we do pull back down into the weekend. I don't know if a lot of people are going to want to be long. We come back and maybe have one more drive to the top, and that sets up some selling maybe all the way into May. But we may not find the top until maybe the 1st of March or so. Sell when you can, not when you have to. Tom will be back tomorrow.